Welcome to this week's market drama. We'll begin with the S&P 500, which was down 0.3% for the week. It is now up 7.4% for the year. NASDAQ was down 1.2%. It's close to the same year to date, up 7.2%. Keep in mind the S&P 500 remains near all-time highs and is up nearly 25% from late October's lows. When it comes to economic data points, the biggest one is we had job numbers come out for February, and it was a bit of you have to kind of like double click to get the full picture, right? Because the headline number, total jobs added in February were 275,000, which was well above the expected 200,000. But when you look at January numbers, they were sharply revised down from 353,000 to 229,000. So the overall picture, right, when you look at the unemployment rate, because of those revisions, unemployment rate actually went up, notably higher from 3.7 to 3.9. And if you double click at this data, total wage growth came down from 4.5% year over year growth to 4.3% year over year growth. Now that's a pretty big shift, and you got to keep in mind that this is, if you look back at March of 2022, the peak was 5.9% for this wage growth. So it's continued to come down. And the reason that wage growth is a big number to focus on, or a big input, is that it's something that the Federal Reserve looks like, as wage growth does kind of show up on service inflation, the service industry or service sector of the economy. So as wage growth comes down, it does act as a headwind to inflation. It cools off inflation, which is obviously what the Federal Reserve is trying to do. So overall, even though those numbers are negative in the sense of, wow, unemployment rate is going up, it's going up from a very low number, and wage growth is coming down. So this actually, to a certain extent, buys into the Federal Reserve's approval of, hey, at some point this year, we'll lower interest rates. We're going to look at numbers on inflation and continue to come down. In fact, Federal Reserve Chairman spoke in a testimony to Congress, and he reiterated that the central bank's intention is to cut interest rates at some point later this year. The market expects the first cut to happen in June. So as these data points come in, it does kind of support that. So that's it for this week. Next week, we have CPI inflation for February, obviously another important data point to keep an eye on. We also have retail sales, which will give us a sense of how the overall economy is faring so far. That is it for this week. Stay tuned for next week.